here's a 100% immigration firm that is now 100% conveyancing. That's not what I bought as an insurer, and that obviously causes problems. It's an attitude towards risk, which is what we're trying to assess, and that's what's driving the premium. We like firms who know what they're good at and stick to it.
Welcome to the very first Coverex podcast. I am hoping this will be the start of several very informative podcasts discussing insurances mainly affecting the legal sector. Today we've gone straight in at the deep end to the much maligned Solicitors Professional indemnity insurance, which is very much a broker-facing market, and so most law firms have never had the opportunity to hear from an insurer firsthand. Today we hope to have changed that and have managed to secure one of the UK's leading solicitors PI underwriters for this podcast. Paul Crilly has been a London market professional indemnity specialist for over 30 years and is currently head of Solicitors Professional indemnity underwriting at Penn Underwriting. Paul, thanks for joining us today. Would we have got you here if Everton had stayed up?
You only got me here because Everton stayed up.
So let's get, I suppose, straight into it. And I wanted to talk to you about the solicitors PI market in general to start with. When I'm speaking to law firms, the cost of the PI is usually one of the biggest issues. Can you explain from an underwriter's point of view for us as to why the premiums are so high?
I suppose over the last 4 years, we've had increased rates. I think 2018 was probably as low as the market had got for a long time. There was a lot of new entrants in the market, and therefore that's going to generate competition. But ultimately, there were exits in 2019, and that's because of the claims position. And ultimately, insurance, it's the many pay for the few claims, but there were a lot of claims, and so there's been a lot of correction in that, which is what's driven premiums up.
Okay. So do we think that we are now, given that where we are in the 2022 renewals, going into the 2023 renewals, do we think we're now reached an equilibrium, or is claims against premium in petered out, or do we think we're going to continue to go up?
Certainly, as far as rate increases are concerned, I think we're certainly in single-digit rate increases. The last 3 years have been double-digit, and again, just due to correction. So we've probably got to around 5% on fee income as a broad rule of thumb as to where it is. I only see it now increasing in line with fees, which most firms have put their hourly rate up to accommodate their own cost of living. It doesn't just affect the public. It affects firms, and law firms are no different in that. So they have to increase their fees to accommodate that. Yeah.
I mean, I know the minimum terms and conditions that are placed on insurers, from your side, from most insurers' side, are very onerous. I suppose, what if any sections are within the minimum terms and conditions that are placed on you are really of concern?
Well, look, the law society have the broadest professional indemnity wording of any profession. Very simple insurance aspects in as much as where premiums are paid to cover the policy. If you're a solicitor and you don't pay that premium, then the policy still covers you. In every other insurance that I'm aware of, that contract isn't in place unless that premium is paid, and that's not necessarily the same situation for an SRA minimum terms cover. So you've got that. It covers non-material disclosure. Which again is something that would throw most things out in other insurances. So it's a very, very broad negligence word, and we sign up to it as insurers. So we know what it is that we're signing up to. But when you take those considerations into play, there's going to be more claims paid out with less premium attributable to it, which ultimately has to come from the profession to balance that out, because that's the whole principle.
I get that, and I understand from your point of view. The in many policies, the ability to avoid a policy for, solicitors not doing what they said that they were going to do, or not saying that they were doing. You have the ability to avoid it, whereas here it's difficult, and the runoff provisions, as you've said. The non-payment of is of great concern to you, obviously. Is there ever going to be an easy way to reduce this burden on the insurers?
It's something that we've talked about as the insurance market. The SRA have looked at trying to reduce premiums, but ultimately, it comes down to claims in and premium in, and where the balance is. And as we said earlier, we're probably at about the right point, because claims are still at a high level that are driving the premiums, and unless you reduce the cover in some way, which the SRA are very reluctant to do because they always want to protect the public, obviously. The only other way around that is to make sure that other aspects of it, like paying additional premiums or runoff, all of that lost money has to be paid for in the same way that claims are, and therefore that's going to add to premium. So if the direction is to reduce the premium without reducing the cover in a few simple terms, like paying for your premium and that kind of thing, it's there's not an awful lot more that we can do other than charge an appropriate level.
Yeah, I mean, it's interesting you mentioned that, because I've often thought that it doesn't make sense for me that some of the sole traders who do low risk areas, turning over kind of sub 200 grand turnovers, acting on relatively, for instance, immigration or criminal, legal aid criminal practices, they're still having to buy the 2 or 3 million, depending on where they are. And surely, given the fact that they're doing really low risk work, low value work, they should have the ability to buy a lower level of indemnity, but that's not available to them, is it?
It's not. I guess there's the freelance option, which is something that's been introduced probably on the back of some of these consultations at the end of 2019. Look, you've got low risk firms, but there's always that element that they can dip into other covers, other activities that we would still need to cover. So if we were able to specifically cover just 100% criminal activity or immigration or the low risk areas, then I'm sure there'd be a very competitive market for that area. But because the wording is so wide, you've got a situation where you've got to give yourself enough scope to recover the potential liabilities, because these firms could then take over, be the successor practice to a firm that wasn't just involved in low risk work. And as an insurer, you've got to pick that liability up, whether you've been made aware of it beforehand or otherwise.
It's interesting on the freelance that you mentioned, the freelancers, because I know that's something you will, that we've worked with together and you've looked at for me. And whilst what I've found is that whilst the covers are necessarily slightly less, it doesn't reflect necessarily in the premiums. Premiums are obviously lower, but not substantially lower to the levels that I kind of think maybe the SRA were hoping for. Is that going back to what you were talking about, the claims veracity is still probably the same whether you're a freelancer or an SRA regulated practice, or is it that the cover isn't actually that much less that you're offering?
I guess the freelance activity, the problem with freelance cover is there aren't many markets that are interested in that sector. I was at a PI committee, the Law Society PI committee, a couple of years back when they were asking who was offering freelance cover, and at the time I think we were possibly one of two. At the moment I can only think that we're now one of three. So it's not an area of massive interest to the insurance market, but I don't know an awful lot of volume is being transacted in the market. So, whilst it's there.
So I mean, I suppose these things are always, revolutionary and cool, and they come in the market and people start to talk about it. But actually, in terms of what you're saying is in terms of the take-up, there hasn't been too many people, as far as you're concerned.
Well, certainly not with us. There's a couple of other markets that I know do offer the product.
I mean, I don't. Obviously, I want to move you back onto kind of the solicitors PI space if we can, because I know that's kind of the main reason why we're here today. There was a consultation last year with regard to potentially moving third-party losses as a result of cyber incident from the minimum terms and conditions. What was kind of your view on this, and if it was to be, I know it was kept in, but if it was to be removed in the future, would it have any impact on the premiums that you're putting out there?
It's about risk management. It's about whether or not people or firms have the right covers in place for the right event. For various events, you've got your professional indemnity to cover the errors in emissions, you've got your directors and officers cover, you've got your public liability cover on your building, and your employer's liability, and all of these other products, and they're all designed specifically to cover those particular areas. And there might well be, and there often is, it's a grey area, and so when we're looking at cyber, we think you need a specialist product in the same way you need a specialist wording to satisfy your regulator to protect the public and your clients and yourself. With cyber, we look at it in exactly the same way, and the cyber products that are out there are part of your risk management in the same way that if you're looking to cover your public liability, you don't rely on a negligence policy. So that's where we take a view on it. And the SRA have looked at not making cyber mandatory, but them and the Law Society are trying to encourage firms to buy it.
We've spoken about it before, and I'm obviously been very supportive with you in terms of my views, and I'm totally in agreement with you with regards the cyber element, because certainly for a litigation firm, somebody that's got various court deadlines, conveyancing, which after exchange you've got, if you've not got access to your systems for a length of time, forget the exposure to yourself as a PI insurer, but actually, how's it going to look as a business? How's it going to affect your clients, your reputation, and all these things? And I suppose the main thing for me, and you'll probably clarify, but the biggest thing for me with the cyber policy is the ability to call on the 24-hour helpline, and the ability to have the support that at any point they will be able to help you to get these systems back up and running as quickly as possible.
If you've got a situation where you're covering all of these security aspects around your system and putting protection in place, but ultimately, from a risk management point of view, you think you're doing enough. And believe me, I mean, I'm sure British Airways and Boots and everyone that's been in the press last week thought that they were doing enough, or they probably think that they can never do enough. If you're not protecting yourself on that, then all that's doing is feeding into us about how you are viewing your attitude towards risk management. And that is just something that we take into consideration along with all of the other many different aspects of your submission, your work activity, your fee income, your areas of your client base and everything. And it's an attitude towards risk, which is what we're trying to assess, and that's what's driving the premium. And so, premiums are going to not necessarily reduce because of what cover we think we are or we're not offering within the PI side, but it's your attitude towards that area of risk on the business, and that's what's going to drive the premiums down. And the other way, if it's less so, to the point where it might well be that certainly for us, you're not a firm that we're interested in if this is an area that you can't prove to us that you've or your broker,
It's almost like what you're saying is, firms take Lexcel seriously.
Yeah.
If they want to be a serious player within the legal sector, they get Lexcel. Conveyances, they go and they get CQS. They spend a lot of money going to get themselves ready for these things. And what we're saying here is this should really, the cyber and your protection around the cyber insurance really should sit alongside it.
Absolutely. If I've got friends that come to me, regardless of what activity, they're involved in, whether it's banking or surveying or whatever, and they say, what products do we need? Then cyber is going to be right up at the top at the moment, because it could end your firm in a very short space of time.
I mean, we're both in agreement, aren't we, that there's a few elements why solicitors' PI is so high in terms of the claims veracity, but also how wide the policy wording is. As an insurer that insures circa 900 law firms, you're a serious player in the market. How much engagement do you actually have with the SRA, the regulators, the Law Society, and are they regularly in touch with you?
So I'm invited to the Law Society PI committees, as are most of our peers, the insurers and brokers, to the Law Society. The SRA also consult with us on various aspects, and have a regular dialogue with them, not necessarily the same, albeit SRA do sit in on the Law Society PI committee. We just try and keep an open dialogue with both organisations, because it's the product that we've decided to get involved in and support, and we need to know what is causing the Law Society members concern and what is causing the regulator concern, and they find out from us what's causing us concern and what's driving the premiums ultimately. I mean, a lot of these conversations are with a view to try and reduce the premiums, and the premiums are very, very high, but they're high for a reason, and it's ultimately the claims. It's not high for anything else really.
I mean, it's really been insightful, because I think that there is a lot of rumours that the premiums are high as a result of what the policy that's actually set out and the burden on you. But reading from what you're saying today, it's mainly due to the claims veracity. And if claims can't come down, then regardless of what is written within this policy, premiums aren't going to be affected drastically. I know, having spoke to yourself and various other underwriters over the night, it's mainly the dabblers that are regarded as people that cause a lot of the claims, the firms where they are doing multiple areas of law, not seen as experts or not seen as niche within their firms. So if we look at the niche firms now, the ones that do one, maybe two areas of law, do we think this is something that if the regulator said to firms when they are setting up or moving forward, which areas of law are you experienced in? What have you done the most? Which two areas of law would you pick? And firms are restricted to a couple of areas of law. Do we think that could have a significant impact on premiums?
Kind of rough rule of thumb is if you're per partner, per practice operator, you've got probably no more than 3 areas that you want to be focused on, because once you start, if you're a 80% immigration firm and you do a bit of landlord and tenant because of your client base dictates that that's the way you go, but then you're picking up other bits because they want to use you as a lawyer that you've trusted. If you're not up to date, certainly in some of the the fast moving, the changes in conveyancing, for instance, if you're not up to date in that, then you shouldn't really be picking it up. Why would you start doing just a few bits of conveyancing when that's not what your firm is about? And all that will do from an insurer's point of view is possibly drag you into areas that will restrict your market access, and therefore that's immediately reducing the competition for your own business. So it's a false economy. We like firms who know what they're good at and stick to it, and hope that not only that they're focused obviously on those areas of law, but that they can then run a business in line with it. Because as I said before, quite often it's not the law that is wrong, it's a business process or something that's fallen down, and maybe they haven't registered the property or got the stamp duty sorted, and therefore that's going to generate a problem. And if that generates a problem for the insurer, and they're going to pass it back, we're going to pass it back.
Yeah, I mean, I know it's more complex than obviously how we're talking, but I'm sure and obviously large firms are going to have lots of people, lots of partners with these niches, so they're entitled to do all these. But at the smaller end, your 1 to 3 partner size, it does surprise me that we can't come to the SRA can't come to some kind of agreement whereby it's restricted in terms of what areas they're able to do, and it would benefit everybody from what you're saying, in that actually if it was restricted on areas of law, you'd be more comfortable to write premiums more affordable.
Yeah, if you were to segment certain areas of practice, or that where that was all that you got involved in, then I'm sure there would be much more appropriate levels of premium in those areas. But the problem is with the wording, if people do stray out of those lines, there's no protection for the insurers, and so to a certain extent you've got to put a bit of contingency in there for that. And they got rid of the ARP, and that was keeping a lot of insurers' interest out of this market, because it's the unknown. And what insurers want is certainty and the actuarial confidence to go, if we write this business, this is what we're going to make. But if you've got an element in there where unpaid premiums and people doing stuff that they shouldn't be doing, and you know, to a certain extent, I've felt that the insurer market regulates the profession, you know, to an extent, because we're providing professional indemnity or not based on experience.
I mean, certainly at the moment with the new starts, we're seeing a lot of, you know, people coming, and yes, they have got the requisite qualifications for the SRA to authorise them as a new firm, but actually, you know, they are going to be wanting to do a lot of areas of law, and from what you're saying, because of the uncertainty and the fact that they're not necessarily niche, will mean that you're more unlikely to write those cases. Whereas if you got the certainty from the SRA on the areas of law that this firm was allowed to do, then actually it might become more attractive to you.
Absolutely. We take firms on, and you know, I mean, over the last 3 or 4 years, the world's changed drastically, but people starting up at the end of 2019 to 2020 with all these plans to do immigration, or you know, whatever it was, and then they start and there is none, and so they've got to, you know, pay their mortgage and feed their families, and so they do whatever work's available. And if at the time, you know, the biggest bounce was in the stamp duty holiday, and so they go and change tack and get involved. Not to say that they're not qualified to do it, but it's not what their interest is and what they plan to do. And then you've got a completely different firm from what you've been told is setting up. And then you get to renewal and you go, well, here's a 100% immigration firm that is now 100% conveyancing. That's, you know, that's not what I bought as an insurer, and that obviously causes problems.
Interesting.